What's up, everyone? I hope you're all having a fantastic day. To get us started in today's video, we've got a tweet from James K. Filan. We can see that Judge Torres has finally taken the stand on Hinman's speech and denied the SEC a chance to seal these documents from the public. We all know the SEC tried their level best to hide these documents from reaching the public, claiming that they might contain sensitive company information that shouldn't be disclosed to the public. In my opinion, the SEC is hiding something that's in that speech, and that's why they're so nervous about it. Now, it will be in the public's eye, and it's time for us to judge for ourselves. Thanks to the American justice system, though, it's taking too long. But I feel we might soon get to the truth. So let's roll that intro and start today's video. As always, welcome to Moneyside, your favorite crypto channel. If you're new here, hit that subscribe button and turn on notifications so you get updates when we load new videos. Don't forget to smash that like button if you like our content, and you can always leave a question or a comment in the section below. To start us off, here's an interesting tweet. It comes from Susan. She says, while the U.S. continues to focus on enforcement instead of clarity, the EU has taken a big leap forward with a sensible, progressive approach to crypto regulation. We look forward to building and growing in the European marketplace. The U.S. is becoming hostile to crypto companies, and unfortunately, it's getting worse by the day. Even Brad Garlinghouse has been heard in interviews lately saying that anyone who wants to start a crypto company comes to him, he would outrightly tell them to move their business to another country. The dollar seems to be getting weak, and the crypto world could be the next salvation this currency needs. However, with Gary Gensler heading the SEC, I doubt the idea of allowing crypto to integrate with fiat currency would ever see the light of day. Thankfully, the U.S. government has several branches, and that means Gensler has to answer for his misconduct with the crypto world. And it all starts with the current case that's going on between the SEC and Ripple. As much as we've seen very little development in court since the SEC is fighting tooth and nail to keep their secrets hidden, things are starting to take a turn. The world is now realizing how the SEC has been stifling innovation, crypto innovation to be specific, because they do not understand this space. Gensler, for some reason, is in charge of a world he doesn't have the slightest idea of how to operate. More importantly, he doesn't really like crypto. Most people believe it's because he hasn't invested in it, but it's not all doom and gloom. In another update today, we've got this from Fred Rispoli. He shares a very hot take on his Twitter feed. He says that the summary judgment ruling is obviously written, maybe completely finished, maybe some final touches left. Been saying any day now for a while, but it's really any day now. Also, nothing amazingly unexpected in this ruling except for the Hinman email decisions. Fred Rispoli further states that this could be good and bad news in his opinion. A complete Ripple win would have given Judge Torres an out to not order production. The same goes for the SEC. Doesn't automatically mean neither we win outright, but as he has predicted, still thinks that these are both low probabilities. He concludes by saying that this could compel the SEC to settle. Yes, but he thinks that the cat's out of the bag on these docs, and eventually some enforcement case would have gotten them publicly disclosed, if not here in Ripple. But the tone of this ruling is pro-Ripple, so we can only hope that that carries over into the summary judgment ruling. Looking more into what's happening in the crypto world, we can see that Ripple's CEO took to his Twitter feed to welcome Medico and CEO Adrian Treccani to Ripple. In his tweet, Brad said that as Ripple expands into custody, a key part of the crypto infrastructure, they will be able to support customers with a technology to custody, issue, send, and settle any type of tokenized asset. This is massive. He further stated that today they are proud to announce Ripple has acquired Medico, becoming the sole shareholder of the Swiss-based provider of digital asset custody and tokenization technology. Ripple and Medico already share a focus on enterprise utility, regulatory compliance, and a global-first mindset that will help us deliver the best possible experience to our institutional customer base around the world. Coming out of one of the coldest crypto winters yet, he keenly states that he's incredibly bullish about Ripple's trajectory. He adds that every day the Ripple team is thinking about the long-term opportunity of crypto utility, putting money and minds behind that mission and partnering with folks who share that vision. And now, as we wind up on today's video, we have another update coming to us from CNBC International. Brad Garlinghouse, the CEO of Ripple, says that the U.S. has made crypto rules as confusing as possible, and the U.S. SEC has really been at the forefront of that confusion. According to Garlinghouse, the unfortunate thing about that is that it has encouraged companies like Ripple to invest more outside of the U.S. He added that 95% of Ripple's customers are non-U.S., and most of Ripple's hiring this year will also be outside of the U.S. He also reassured everyone that Ripple is in a good financial position. In fact, just as we mentioned previously in this video, Ripple funded the Medico purchase with $250 million of cash off its own balance sheet. According to Garlinghouse, Ripple has a very strong balance sheet, and we are leaning in and playing offense. And this is just an example of that.
Given the fact that there's a lot of caution out there in the investor community after a number of high-profile collapses in the crypto world, by getting in on the infrastructure more, are you trying to iron out some of the risk and volatility that's associated with this sector?
Well, I think at its core, this is a bet about the long-term view of where digital assets and blockchain technologies are going to change how financial institutions manage and certainly transact. At the core, we think there's going to be a lot of examples where through tokenization, you're going to see assets that we think about trading today that are tokenized. And institutions need to think about how they store digital assets today, known as cryptocurrencies, but also those tokens of the future. BlackRock's CEO, Larry Fink, talked about this being a multi-trillion-dollar asset business. And we think it's going to continue to grow. It's a great fit for us because it's really where Ripple has been throughout our history of focusing on infrastructure and solving real problems for real customers.
A few years ago, back in 2020, you had a bit of a run-in with the SEC. Medico is based in Switzerland. It's got non-US employees, as far as I know. Was that part of the appeal, given that US regulators are cracking down more and more on cryptocurrency companies?
Well, look, I think it's fair to say that the U.S. has made it as confusing as possible as to what the rules of the road are for the crypto industry. And frankly, it's why you're seeing entrepreneurship and investment flowing into other jurisdictions. Certainly, Europe has been a significant beneficiary of the confusion that has existed in the United States. And yes, as you described, the U.S. Securities Exchange Commission has really been at the forefront of that confusion.
Please keep in mind, we're not a licensed financial advisor. All videos on this channel are intended for entertainment purposes only. Let us know what you think in the comment section below, and let's start a conversation. Thanks so much for watching. Couldn't be here without you. Don't forget to like this video and click on that subscribe button below. Turn on notifications, that way you'll know when we post new content. Look forward to seeing you on the next Money Side.